When stocks and gold rise together, most people cheer. They see green across the board and assume confidence, strength, and a healthy market. But Robert Kiyosaki has warned about this specific situation we are in right now for years. Because when stocks and gold rally at the same time, that, my friends, is not confidence. This is confusion. And historically, confusion in markets does not resolve gently. It resolves violently. All right, guys, welcome back to Ledger Prime. We don't chase narratives. We don't do that here. We study signals, capital flows, historical patterns, and the quiet moves smart money makes before the headlines show up. Today, we are going to be talking about a signal that Robert Kiyosaki has repeatedly flagged, and one that most investors are completely ignoring or even cheering. Okay, so let's talk about this. Let's talk about the relationship between gold and equities and why what is happening right now, right? Today is Christmas morning. What is happening right now is extremely concerning. So under normal conditions, markets behave rationally, right? Stocks represent growth and gold protection. They don't usually rally together, right? If people are afraid that the market's going to go down, gold goes up. If people are totally risk on, they think everything's fine, gold kind of takes a backseat, right? When they feel confident, when investors are confident, they buy the risk, right? And that is stocks, crypto. When they feel uncertain, they buy safety, gold, right? And that push and pull is what usually keeps the system balanced. But right now, stocks hovering near all-time highs. Gold, silver breaking out aggressively right at the same time. And this, guys, this combination is extremely rare. And when it happens, history says you better pay attention. Because gold, it doesn't chase optimism. It doesn't chase growth. It front runs stress. It doesn't react to headlines. It reacts to imbalance. And we've seen this before, right? Think back to 1999, during the dot-com boom. Stocks were euphoric, off the chart, 200 times earnings, 500 times earnings. It was crazy. And everyone believed that technology had rewritten the rules. This time is different. What's that kind of mimic right now, guys? The AI boom. AI is going to change the world. People are going to be so much more productive. Boom, through the roof. NVIDIA, right? Micron, all these chip companies, AI companies, right? But back in 99, let's go back to 99, during that dot-com boom, what did gold do? It quietly stopped falling and started basing out. Gold was smart. It was like, something doesn't feel right. And then what happened? A couple of years later, tech completely collapsed, the dot-com bubble. And in 2007, equities were near all-time highs. Housing was fine. Don't look, it's fine. It's a new market. Credit was contained. Gold kept getting bid up anyway. Then came the financial crisis. Gold wasn't early by accident. It knows something. It front runs stress. And it was early because the market could sense it. This time though, guys, this time's a little different, and it's slightly more concerning. Because here's the part that we miss today. Most people, not us, because we're talking about it, but most people miss this today. This isn't retail investors panic buying gold coins. Oh no, 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 no. It's not fear-driven speculation. It's central banks and entire countries. So for the last several years, go look it up. Central banks have been accumulating gold at the fastest pace in decades. We've never seen them buy this much gold, ever, right? Tons and tons, literal tons of gold. And Robert Kiyosaki, he's been noticing this, and he's been vocal about this for years. Why would the institutions that print money, right? Boom, print that money, rush to buy an asset that they can't print? Because they understand something the average investor doesn't. They see it. Central banks don't buy gold to beat the market. They buy it to hedge systemic risk in the system. They're reducing their own exposure to long dated government debt. The debt that they are creating by printing money, they're hedging that with the purchase of gold. So fiat currencies, right? They're hedging the dilution of fiat money, political instability, monetary experimentation, right? Quantitative easing. Gold isn't a trade for them. It is insurance. And Kiyosaki, man, this guy is right on. He's not rich for no reason. He said gold doesn't go up. Paper money goes down. So gold doesn't go up in value. It's the amount of dollars that get printed, the amount of dollars it takes to buy the gold takes more, right? Gold, if we never printed another dollar, gold would just stay where it's at. But because the dollar keeps debasing and there's more and more of them, it just takes more and more of them to buy gold. And central banks know that, and they're positioning themselves accordingly. So what are these equity markets pricing in that we should be aware about, right? Their equity markets are kind of priced right now as if interest rates will just fall smoothly. Growth in AI, think NVIDIA, is going to continue uninterrupted. And that debt doesn't matter. 40 trillion? Pfft, big deal. Oh, whatever. Just take out another. No, but they're priced that way. The markets are priced like debt doesn't matter. They're priced like liquidity will always be there. It won't dry up, guys. Pfft, nah, it's fine. But that's not how history works. If you're a student of history, right, markets don't break when things are bad. They break when the expectations were completely wrong. And right now, the expectations are completely and extremely optimistic. And gold, look at the price of gold and silver. Gold disagrees wholeheartedly with that expectation. Stocks at all-time highs, gold is like, no, you don't. No, this is wrong, right? The markets do not lie. So one of these two assets, gold or the market or crypto, right? Maybe crypto is mispriced. One of them is mispriced because when stocks and gold rise together, one of them is wrong. History has proven this time and time again. Either gold is misreading the future or equities are completely ignoring risk. History, though, guys, is very clear about which one eventually reprices itself. And this is not because gold is magical, but it's because gold doesn't rely on promises of the future. Okay, stocks rely on earnings, growth, stable currencies, a stable credit market, and gold relies on none of that. So this doesn't mean a crash is going to happen tomorrow. I mean, we could run for another year or two, who knows, right? But what it does signal is that the foundation possibly could be cracking. And I don't want to build my house on a foundation that's cracking. Cracks would show up in gold first. While most people wait for the headlines, right? The wealthy watch the signals. And on this channel, we bring you signal, not noise. And gold and stocks at all-time highs together is a big signal. Now, is this a signal that may never come to fruition? Maybe. Is it something that could take a year, 2 years to play out? Yeah. But it definitely is a signal and something worth watching. And Robert Kiyosaki, he's said it for decades. And I love this guy, man. Sidebar, if you've not looked up, I believe it's called the Wealth Quadrant or something like that. Robert Kiyosaki, Money Quadrant, Wealth Quadrant. Look it up. It changed my life. Anyway, he said it for decades. When protection assets alongside risk assets, the system is warning you. When protection assets rise alongside risk assets, the system is warning you something is going to happen. Now, don't panic, right? Something is imbalanced. An imbalance always resolves itself. The only real question is, though, who is positioned correctly when the resolution of the imbalance starts to come to fruition? Because by the time everyone agrees there's a problem, the smart money has already moved, and that is how they stay ahead. As soon as we already start seeing the headlines on CNBC, the smart money's, they're already positioned correctly. They knew ahead of time, they positioned themselves, then they tell everybody else. So in closing, guys, if this made you think differently about gold, markets, or risk, please like this video, subscribe to the channel. Because Ledger Prime is about seeing the shift before the crowd. It's not fear, not hype, just signals. Okay? Signal, not noise. And right now, the signal is loud if you're paying attention.